All right, let's dive into a classic Wall Street mystery. You ever see a company report what looks like really good news and then the stock just tanks? Well, that's exactly what we're going to unpack today with Kirby Corporation. We're going to get into the numbers, the market's pretty brutal reaction, and figure out what really went down. So, here's the puzzle, right here on the screen. On the one hand, Kirby beat its earnings per share target by almost 4%. That's a solid win. But on the other hand, the stock got absolutely hammered, dropping over 10% in a single day. I mean, what gives? This is the kind of disconnect that drives investors crazy. So the big question is, what did the market see that wasn't in that headline number? And, to make things even more confusing, management was basically doing a victory lap. The CEO himself called 2025 a record year and said the quarter was solid. So you've got the company saying everything's great while the market is hitting the sell button like there's no tomorrow. To really understand that gap, we've got to pop the hood and dig into the details. Okay, let's start by decoding the quarter itself. We'll look at what was good, and then we'll find those little cracks that investors really latched onto. First off, the good news. The big headline number, earnings per share, came in at $1.68. Wall Street was looking for $1.62, so check, they beat. On the surface, that's exactly what you want to see, a company making more money than anyone expected. But, and there's always a but, isn't there? Here's our first clue. While the profit was there, the sales, the revenue, came in just a little light, a $6 million miss. Now you might be thinking, $6 million? What's the big deal? Well, for a company like Kirby, whose business is tied so closely to the ups and downs of the economy, even a small revenue miss can be a red flag that demand might be slowing down. And here's what makes the whole thing so puzzling. Operationally, the company is firing on all cylinders. Their main business, marine transportation, posted an incredible 26.6% operating margin. That's a huge number. It means they are extremely efficient and profitable. So they're running a tight ship, which makes that big stock drop even more of a head-scratcher. This little table really tells the whole story. It's a perfect example of mixed signals. I mean, look at that year-over-year earnings growth. Almost 30%. That's fantastic. But the market's eyes went straight to that little minus sign next to the revenue number. A tiny miss, less than 1%, but it was enough to plant a seed of doubt about what was coming next. And just for a little context, Kirby really has two parts to its business. The bigger piece is marine transportation. But it was actually their other segment, distribution and services, that was on fire, growing over 10%, thanks to its power generation business. But, even that bright spot wasn't enough to change the story for investors. And this brings us to the real heart of the matter. The market's reaction wasn't really about the quarter that just happened. No, it was all about the fear of what's coming next. Let's look at the guidance for 2026, because this is where the story took a very sharp turn. This chart right here, this is Exhibit A. This is the whole problem. Management gave a huge range for what they expect to earn next year. But look at the low end of that range, $6.10. Well, they just finished a year where they earned $6.33. So the company is literally telling investors, hey, there's a real chance we might actually make less money next year. That is a massive red flag on Wall Street. So why is a wide guidance range so scary? Well, think about it. It's basically the company admitting, you know what? We're not really sure what's going to happen. It just screams uncertainty. And for a business like Kirby that is so sensitive to the broader economy, uncertainty is the absolute last thing investors want to hear. Now, of course, the analysts on the earnings call jumped all over this. They wanted to know why the range was so wide, and management pointed to a few things. They said big projects in their power business are lumpy and hard to time. They weren't sure about pricing for their barges, costs are going up, and then there's just all this other general economic noise out there, like oil flows and tariffs. You put all that together, you get a very cloudy forecast. So we have a solid quarter in the books, but a really cautious look ahead. But to get the full picture of why the stock dropped so hard, we need to add one final, crucial piece of context. What was the stock doing before the report? And this right here is so important. In the month before earnings, Kirby stock had already surged 10%. It was crushing the rest of the transportation sector. That tells you expectations were already sky high. Investors weren't just betting on a good report, they were betting on a perfect report with spectacular guidance. The stock was, as they say, priced for perfection, and there was zero room for error. So here's the verdict. The market basically looked at the great results for 2025 and said, yeah, that's nice, but that's history. The sell-off was the market rapidly repricing the stock, not for the past, but for a much more uncertain future. The past was in the rearview mirror. It was all about that new risk ahead. So when you put it all together, it was really the perfect storm. You had that tiny revenue miss that opened the door to doubt. The super wide guidance then blew that door right off its hinges. And because the stock was already flying high, it was completely vulnerable. The reaction was swift and harsh, and it even forced some of the company's biggest fans on Wall Street to lower their expectations. So, after all that, what does this mean for the stock now? Where do we go from here? For that, we turn to our final segment, the one we call the next call. All right, here's how we see it playing out. For the next quarter or so, expect things to stay pretty choppy. The stock is probably going to be stuck in a trading range, really, until we get a clearer picture of the economy. So with that as the backdrop, it's time for us to make our official call on the stock. Our reading on Kirby is market perform. Look, let's be clear. This is a high-quality, very well-run company, but it's operating in what we call a low-visibility tape, which is just Wall Street speak for an environment where it's really tough to predict what's coming next. Until that economic fog starts to lift, we expect Kirby's stock to pretty much move in line with the overall market, but not necessarily be a huge winner. And, as always, this is not financial advice.